Hi, and welcome to this edition of the Midday Market Update for July 23rd, 2020. My name's Kevin Hill, here with the dude, Michael Vincent.
It's nice to be back, Kevin.
It is. We've been off for about 10 days on the Midday Market Update.
We had the diversity
special last
Thursday.
And of course the 3PL,
Summit on Tuesday, which was awesome.
Conference. Yes, it was awesome conference. We'll talk about it a little bit later.
Yeah.
In depth. We'll talk a little bit about SONAR 7.0 coming up.
Yeah. We'll dive into that a little bit.
And as always, the Midday Market Update is interactive.
It is interactive. So get your questions, comments in on LinkedIn, Facebook channels, and we'll get them answered, and we'll read them on there as appropriate.
As appropriate. We always love to talk to the audience.
It's a great show. Did you mention the guest yet? I wasn't listening to you.
I have not. Of course, we're going to start off with the headlines with Andrew Cox,
right,
a research analyst here, and then we are going to talk to Anthony Smith, our chief economist here at FreightWaves, about everything that is dropping today. It's Thursday, so we have initial jobless claims. We have continued jobless claims, so really big information in the freight market. So, and then our real guests. Right?
Our real guests.
Our outside
so we got
guests.
Cheng Lu, president of TuSimple, is going to be on. And then after that, we're with Ken Sherman from IntelliTrans, president of IntelliTrans.
We're going to swim upstream and see what we have on raw materials and those industrials and see if we can get ahead of the curve on that.
Yeah, absolutely.
Yeah.
Absolutely.
So
let's get to the news and headlines, huh?
Let's do it, So there's a theme developing in Texas because they're getting a lot of investment by Amazon and Tesla. What do we have for that, Andrew Cox?
Developing in the state of Texas, and that is the world's most innovative companies are creating jobs there. First is Amazon. Noy Mahoney reports on a new 625,000 square foot fulfillment center that is going to be constructed in El Paso. This is set to launch sometime next year and will bring more than 700 full-time jobs to the area. This announcement comes just a week after Amazon announced an even larger fulfillment center outside of Austin, Texas. This one more than 800,000 square foot and will bring 1,000 jobs to the state of Texas.
That's great. And I guess from the film there's going to be very heavy automation and robotics in the warehouse.
Yeah, it's awesome, right? I mean, the automation, the assist bots and the whatever you call them, the bots that are there, assisting people, et cetera, increasing productivity, safety. Those are very cool. Very cool.
It is.
But there's other stuff happening in Texas too, isn't it?
There is, yeah. And Tesla's Gigabyte factory, right? Andrew?
Yes, Kevin. Tesla is another company eyeing expansion in Texas. Elon Musk is very familiar with the opportunities that Texas offers. You have little regulation, you have large and growing population, strong engineering talents, and lots of very cheap space. And let's not forget the tax breaks that the state of Texas is using to court Elon and Tesla to Texas. So it's now time. This is for all these reasons. This is why SpaceX has been building rockets there since 2014. Now Elon has decided that Texas will be the next site of Tesla's new Gigafactory. This will be the site of where they will build Dooner's Cybertruck. They will also build the Tesla Semi there, as well as the Model 3 and the Model Y for the eastern half of the country. Texas makes a lot of sense, and so does Austin specifically. If you look on a map, Austin is situated almost perfectly in between the three largest metropolitan areas in Texas. Between Houston, San Antonio, and Dallas, you have nearly a third of all Texans residing there. So in any case, this is a huge couple weeks for Texas, and we have a lot of new jobs, a lot of great jobs coming to Texas.
Yeah, very attractive environment for business, with the tax situation. You've like you mentioned, you've got a talent pool there is tremendous.
Yeah, we've been keeping tabs on this on FreightWaves.com. We've had several articles, each of the developments, the tax breaks, leading up to this. Congratulations to Austin and Texas. I'm kind of a little hurt that Tulsa, Oklahoma, who was the second runner-up, is the runner-up again. My hometown, but it is what it is, and congratulations to Austin. It'll be a big boom for the economy, jobs, as Andrew mentioned, right in the middle of huge population centers, which is good for getting talent as well as selling cars. Those are huge markets in Texas. It's centrally located across the country too, so makes a lot of sense from that that point.
Yeah, it absolutely does. They know how to track the business down there, right?
They
I mean,
do.
This is not a new trend.
It is not.
It's a
It is not.
great couple weeks of announcements for Texas, but it's the South. It's really not a new trend with businesses and so on moving through there.
In Texas, yeah, it is.
Yeah.
It's really booming. You know what else this time of year is?
Earnings.
July is earnings season, and it is now in full swing. And Andrew, what do we have on earning releases this week?
Yeah, I'll give you a few winners and a few losers. We'll start with the winners, of course. We'll keep rolling with Tesla here. They announced earnings yesterday. It was a huge quarter for Tesla. They announced a profit of $104 million. This is now the fourth consecutive straight quarter of profitability for Tesla that earns them the opportunity to get a coveted spot in the S&P 500. Also, Tesla rode a huge boom in regulatory credit revenue. This was nearly $500 million in revenue for them. In the same quarter last year, they only generated about $111 million in these credits from selling these revenue from selling credits. The business shows really strong resilience in Q2. They're the only automaker in the U.S. and I believe in the world that hasn't seen declining deliveries so far through this year.
It's good news for those Tesla perma bulls out there, definitely.
Yeah, no doubt.
It
The
is.
perma
So,
bulls? Nice.
yeah, S&P 500,
Yeah.
they're really hitting their stride and gearing up, aren't they, Andrew?
Yeah, they're firing on all cylinders right now, Kevin. Elon did give a little bit of a damper view on the Cybertruck and the Tesla Semi. He said they still have a long way to go. Those are again going to be produced in the new Gigafactory in Texas, and they haven't even broken ground on that Gigafactory. So we may see the first deliveries coming up in 2021 for the Semi, but again, it's going to be very small production numbers from them. But anyway, we're excited to see those finally get on the road.
We are too.
Yeah,
We
hitting
are
another
too.
milestone.
Yes. Let's switch over to full truckload, and there's a brokers that are winners already in earnings season. Can you give us a rundown on Knight-Swift and Echo?
Yeah, absolutely. Knight-Swift had a really nice quarter in Q2. The nation's largest truckload carrier kept the better-than-expected earnings train rolling. KNX reported Q2 EPS, earnings per share, of 57 cents, which beat analyst expectations of 35 cents. KNX also reinstated its 2020 earnings outlook. This is the same outlook that it pulled after Q1. Many of the companies in the industry did so. But again, they've reinstated that EPS with a full-year expectation of $2.15 to $2.30 per share. That's even higher than the previous pre-COVID full-year expectations for Knight-Swift. Deutsche Bank analyst Amit Mehrotra said that the earnings report and the guidance reinstatement surpassed even their most ambitious expectations.
Yeah, I mean, what do you think, Michael Vincent, on the optimism that you're seeing come out of that for the second half of the year?
I'm bullish on the rest of the year.
Okay.
I'm feeling good about the rest of the year. There's a lot of signals that would point to that as well.
There
The
is.
detractors from it are if this happens, if that happens. But
Yeah.
no,
I just
I'm
noticed
feeling bullish.
JB Hunt
It's
was-
interesting because you see some that have lost money, you see some that have done really well. Is it the way they pivot or their verticals, their concentration of business where it is?
Yeah, and JB Hunt came out with earnings last week, and they said that the second half is kind of murky or cloudy or uncertain. I think that was the word they used, was uncertain. But we're starting to see people come out with a little bit bullish. What about Echo? Echo had a very strong Q2 as well, right, Andrew?
Yeah, Kevin, despite gross revenues falling 7% year over year, they did beat analyst expectations on revenue and earnings. Chicago-based Echo was able to control costs really well in this quarter. They were able to draw down 8% in headcount expenses and nearly a 15% reduction in commission expense. So yes, Echo did well this quarter, beat expectations, and the stock is performing well over the last couple weeks.
So they did a great job in cost control. It wasn't necessarily growth for those guys.
It was. I think it was a mixed shift as well from spot freight to upping. I think over 60. I think normally around 50% contract to spot mix, and taking that a little bit above 60% on the contract.
I got you. Yeah, makes sense.
It was big. We have some viewer comments here. Nicholas Kano, procurement at Custom Clearance. Is Tesla present in Kenya? Open for partnership. Eric Serta, Texas. He's a Texan, so he's excited about the Tesla news. And then Faith Duncan says hi. And that's a good question for you, Andrew. Is Tesla present in Kenya? Do you know?
I'm sorry, can you repeat the question, Kevin?
Does Tesla have a presence in Kenya? I know that you've traveled there extensively.
Oh, in Kenya. I did travel there extensively. I didn't see one Tesla there. I know that Kenya's infrastructure, they are putting a focus on EVs. But again, you have to think Kenya is still an emerging market. While there is some wealth there in Kenya, the car market in the wealthy portion of Kenya is dominated by the German automakers, the Audis, the BMWs, and the Mercedes-Benz currently.
Very good. Let's go to, we talked about the winners. Let's talk about the losers of earnings season. What do we have? I think we have some airlines in that mix.
Yeah, Kevin, it has been an absolutely brutal quarter for the airlines. United Airlines is even applauding themselves for being the least worst in the group. United Airlines being the least worst has been a big plus for them. The executives of the company took pride in them only having a record-setting loss of $1.6 billion. They went on to say that they are outperforming the other big domestic competitors by better managing their capacity. Last week, Delta announced a quarterly loss of $5.7 billion. American Airlines announced a $2.7 billion net loss, and Southwest lost $915 million in the quarter. But again, Southwest is much smaller and primarily operates domestically. It has been an awful quarter for the airlines, and I think that they're ready for this thing to be over.
I think they are ready for it to be over, but it doesn't look like it's going to be over anytime soon. I just pulled up the TSA passenger check-in numbers, and we're running still about 20% of capacity from 2019.
Still at 20%.
Still at 20%.
So it did it take a tick up and then drop back down recently?
I think it did. Yeah, I think it's ticking back down. It never really got strong, but with some of the COVID cases in California, Florida, and Texas right now, it's I know a couple of airlines have reported that their future bookings have taken a dive.
Yeah, because they were like adding some flights and stuff like that. I guess that has ceased, has it?
I don't know if it's ceased, but the picture of continuing growth like that has dampened, definitely. Is that kind of, did you get any of that from the articles, Andrew?
Yeah, a lot of the analysts are looking to the airlines. A lot of the airlines are kind of brushing off the idea of Zoom calls and this idea that commercial flights for business are going to rebound sometime soon. They're brushing off that idea that they're not going to come back. I think a lot of analysts are kind of questioning that outlook from the executives of the airlines. I mean, that's a major portion of their business, and a lot of people have gotten used to Zoom calls, and that's definitely going to hurt their business long term.
I think I agree with the analysts on that part.
I do too. Will they rebound somewhat? Yeah, absolutely, but they're not going anytime soon back to where they were pre-COVID.
They are not. They're not.
Not going to happen.
Yeah, and you can find these headlines and a whole lot more on FreightWaves.com. Andrew, you were part of the 3PL Summit, and you had a session with Kenny Lund. Can you give I guess it's not a preview anymore, but a wrap-up and what you guys talked about?
Yeah, sure, Kevin. Kenny and I had a great discussion on what food shippers want. I questioned him on a 2007 article that I found that kind of gave the big difficulties that food shippers were dealing with just 13 years ago, and they were similarly the same things we're hearing nowadays, that we haven't really gotten over those problems. So I questioned Kenny why it was so difficult, why these problems we can't get over, and we also talked about his history being the first food runner or food shipper for Costco. He did some of the first brokerage loads for Costco back when they started moving fresh food back in the 90s. So he's got a very long history. He is a very knowledgeable man and gave us three decades of insights there in that 20 minutes.
Thank you very much. Yeah, it was an amazing session, and you can find that on tv.freightwaves.com and the virtual 3PL page as well. So,
yeah. Go back and watch it.
Definitely.
That was a heck of an interview.
It was.
It was.
It was.
Got a lot of really, really good response. But you got to go back and look at it and look at all those things on tv.freightwaves.com.
Yeah. So there was a 3PL Summit that we had on Tuesday, all day. Great sessions, great shows.
Yeah.
One of the big announcements that came out was SONAR 7.0 and the upgrades,
with some really, really good upgrades. Craig Fuller, our founder CEO, made that announcement and went through and kind of showed parts of that. I'm going to have Zach Strickland on freight forecasting later today and we're going to take a really deep dive into some of those, because some of those releases they're really important and extremely useful. The one was lane Scorecard.
Yes.
So the lane Scorecard it's really an RFP tool. And you're able to upload your lanes that you have in an RFP or for analysis into this, multiple lanes, batch lanes, and then it will run the analysis based on our data and show you where those lanes are going. It's got predictive rates and spark charts to show which direction it's going. You can do it by different lengths of time, a month, 3 months, 6 months, 12 months out. It gives you the lane scores as far as the volatility of those lanes and what the likelihood of volatility is out into the future on those lanes as far as pricing and capacity constraints, et cetera. It's got the origin destination scores that has been in Sonar for quite some time. And then you can download all that data back into your own database and mix it with the data that you already utilize.
And one of the great things about it is it eliminates, you get all this great analysis. So it would take you so much time and resources to do on any one RFP, and it really automates that. It gives you that.
It does.
That analysis from various data points that recreating would take basically a whole department.
Yeah, absolutely it does. And it spits back the current rate and the predicted rates at specific time lengths, intervals. So, yeah, it really speeds up the process. Very automated, very easy to use. Like I said, Zach and I will be going through this a little bit later today at 4 o'clock on freight forecasting in depth, along with some other tools that were in there.
Yeah, like the ocean tool, right?
Well, the ocean tool, but let's not miss the predictive rates as well. So
Exactly.
refrigerated rates are now in the predictive rates app that is within Sonar. So that's an addition. And then you've got the ocean tool, which is I'm not a pricing guy. I'm really big on the lane scorecard. It is a great, useful tool, and it's great because it really brings the cross function of Sonar from operations and planning into pricing, right? And it's a great tool. But the ocean dashboard is one of my favorites. I just love that space. I was in that space for about 8 years, but I love that space because it's not customs data, Kevin. These are bookings, right? So you're looking at volumes on the ocean by origin and destination, origin countries and origin ports and destination ports, and by the different carriers into the future. What's going to be happening 7 days out, 14 days out, et cetera. These are the bookings by volume of bookings or shipments, but then it's also broken down by number of TEUs or 20-foot equivalent units. So you're looking way upstream as far as the effects of imports and the volumes at our port cities. And then subsequently the other markets that hit there, right? You got the port cities, you got drayage that's going to be impacted, you got warehousing that's going to be impacted, local trucking moves, and then long distance trucking moves, and so on and so forth. You watch the volumes hit Southern California. What happens a week, 2 later? Yeah. Chicago, Memphis, Dallas blow up, right? And so you're way upstream on these things now.
It's fascinating.
Yeah, it's really good. And the other thing that's in it, I don't want to miss out on this because this is highly important. Is really it's showing the direction of where Sonar is going as far as it's the interface and the user ease, I guess, of using it. Right, it go kind of moving away from that ticker-based data sets that we have inside there. It's very interactive. It's click and interactive and moves around. Very, very, very nice. Very slick. Much easier to use. It's the kind of the direction. You're kind of getting a peek as to where the evolution of Sonar is going. It's tremendous stuff.
Right. Perfect. Up next now, we have initial jobless claims. They hit every Thursday, and we're going to talk to our chief economist right here, Anthony Smith, to get that headline number that was announced this morning. What do we have, Anthony?
That's right, Kevin. So this morning we got our new release for jobless claims, and we saw that a 1.4 million increase, or up to 1.4 million for the week. So this is the first time we saw a week-to-week increase since mid-March, when these claims started to kind of skyrocket for the initial onset of coronavirus pandemic. And so this is definitely not what we wanted to see. This is, again, the first increase since March. I think it's a little bit indicative of those cases starting to kind of come back on the rise. This is one of the things that we spoke about earlier, I think a few weeks back, when we started to see those cases starting to spike a little bit more, that this is going to have some effects on employment in some of those metropolitan areas that are experiencing this. So this is exactly what's happening right now. We're seeing an increase in cases. Continued claims did go down, but again, the continued claims measure is lagged by 2 weeks. So it's not the most up-to-date measure, but we did see a slowing in the rate of decline in initial jobless claims. And just again, this week is the first week we've seen an increase since March.
We have jobless claims, and the other part of that equation are benefits and extended benefits and stimulus packages in Washington, D.C. Do we have any updates on unemployment benefits and those trends and what might be happening in the very near future, the coming weeks?
That's right, Kevin. So those benefits are set to expire in just a few days here. So a solution needs to be reached pretty soon, because if not reached in the next few days, there will be a long break over a month, I believe, for Congress to recess. And so when we're looking at a deal being reached, this is going to be something that's critical for millions of Americans. I think the likelihood of a deal being reached is high. I'm not exactly sure if it's going to be matched with the same benefits that were reached earlier on in the year. This might be something that's a little bit more targeted for those that have been affected a little bit more adversely. This might be something that might vary, again, state by state. So I think when we're looking at benefits, it's a good chance that we're going to see some extension of some sort or some variation. Just not exactly sure if it's going to be the exact same package that we've seen since the beginning of the corona pandemic. The other thing is that now that we're seeing the state of the pandemic right now, there are more cases right now. We're starting to see jobless claims trying to come back up a rise again. So this is something that we're going to be watching closely over the next few days. And it's definitely going to be a hot topic over many outlets as we see if there is any type of solution coming up here for jobless claims and benefits.
Yeah, I agree with you. I think that the likelihood of a deal is extremely high. In fact, I bet it will happen. I mean, it has to be done.
Something will happen.
Yeah, something will happen. There's got to be some sort of job. There's got to be some sort of stimulus that comes down again.
There should be, and part of that stimulus and part of the $1 trillion question maybe that we have going on. The second quarter was one that unlike any we've ever seen, and that number is coming out very soon, isn't it, Anthony? What are the expectations for Q2 GDP?
That's right. We have a GDP set to release next week, and needless to say that a lot of expectations are that this number is going to be the lowest of the year, especially with April being the month of really complete full shutdown within the U.S. That's really going to drag down a lot of the numbers, the overall number. We're seeing estimates anywhere from upwards of being down over 33, 35% in that range. So it's definitely going to vary from outlet to outlet and from different estimates from economist to economist. But I think it's safe to say that it is likely that we will see a quarterly decline somewhere around that 30% mark.
And it was kind of what the initial estimates were in April, so I don't think those have really changed. It sounds like that much. I mean, on the bullish part of it, is it like 10 or 12%, some economists, or is it the consensus really down into maybe a 30% negative number?
That's right. Some are expecting that maybe with some of the retail sales activity and the consumer activity and a lot of the circulation of some of the cash flow that a lot of people have been able to receive through those unemployed benefits, that would be able to prop up some of the overall GDP numbers, since such a large portion of it is going to be derived from consumer spending. But like I said, there's a wide range, and I think even federal outlets are going to kind of be struggling with kind of trying to pinpoint this number down, other than the ones that are going to actually be releasing this number. So I think we're looking at GDP. I think over 20% is very likely, 30% possible. I've seen numbers as high as 40%. I don't think that's going to be quite there. but I think definitely within that 20 to 30% range is definitely possible.
If we move over into the future, like Q3 GDP, so there's got to be some estimates, initial estimates and expectations out for a Q3 number. Are we seeing less negative, or are we seeing any estimates that might be in the green?
Yeah, I think the consensus for throughout the country is that the second half of 2020 will be much more robust than the first half overall. Estimates around there, again, it's a shot in the dark just because there's going to be so much uncertainty with COVID-19. But I've seen estimates anywhere around 12 to 20% increase in the third quarter. So definitely in that double-digit growth. But again, that double-digit is coming back from such a low. So it's almost like that even though it's a nice, strong rebound, so to speak, it's because it was so low in the second quarter. So we are expecting some positivity in the third quarter, and again in the fourth quarter. So again, it's going to be a lot's going to be depending on the course and the path of COVID-19, but a lot of expectations are positive and optimistic for the second half of 2020.
Yeah, despite the some of the areas going back into lockdown and some of the outbreaks.
I think so. I think, Anthony, on like the LMI, the Purchasing Managers Index, the Dallas or the Fed surveys.
Fed surveys.
Are you seeing those kind of bullish numbers come back, or are they still just less bad? Or do you see any trends?
Yeah, first one with the LMI, we are seeing that there is expansion within the transportation industry, primarily with coming from the aspects of inventory levels. We saw a lot of pull forwards and warehouse capacity really tightening with expectations of product being put into place so retailers can have access to them, with the expectations that the economy would start to open back up at a pretty decent clip. So that's going to be really a strong point for transportation, is what's happening with warehousing capacity and what's happening with overall inventory levels. A lot more strain, I think, on the downstream with those consumer-facing products compared to upstream with some of the more manufacturing warehousers. With the PMI, we did see an increase over 50, so that is a good sign overall for manufacturing. And we did see a number over 50 for the new orders component. So that new orders component is a forward-looking index to measure what production is going to be coming online over the next few weeks and months. And so that, again, is another good sign. But again, it's all going to come down to COVID-19 and the path that it takes. I think, as Vincent just mentioned, we're having more states kind of shut down a little bit more, slow their reopenings, and that can really impact the pace that was kind of starting to be set with some of the manufacturing activity that was just reached over this last month.
Yeah, I don't think it reverses the trends. It could slow down the steepness of the curve, if you will. Mm-hmm. Right? I mean, because the opening is going to happen, and we'll get through this, and people are going through, you got new mask laws, et cetera, and closing down, and there will be some type of stimulus or benefits package that comes through over the next few days. They can't take a month off and let this just collapse, right? You've got people that are going to be kicked out of their house and so on come August. Yeah. And they can't have that. It's not going to happen.
No,
right.
It's not going to happen.
The stimulus is going to be there, but it will slow some things down, I think. But
it will.
I think that it continues to rise. I think the rebound continues to go on, and you can see it in some of our numbers. You know, in just about every number. The outbound tender volume index is up, and Anthony, I'm looking at the month-to-month maritime imports, and it's not just retail anymore. Right, it's not e-commerce, it's not electronics. You've got these increases in durable goods and manufacturing and distribution over the last month, and in fact, imports are above 2018, 2019 levels right now. Imports.
They are, definitely. Well, thank you very much, Anthony Smith, for your time today, our chief economist here at FreightWaves, and we will see you on Tuesday for our next midday market update. I have a comment here from earnings seasons from Farouk Shafiq. Hi, it seems like the current season for freight brokers is good profit. Please share your thoughts on what we're seeing truck profits coming in the next year. And I think from Knight Swift and JB Hunt is that they are very bullish on it as well.
They're very bullish on it. It depends on where their freight mix is and how well you can pivot and how well you can control your costs, et cetera. Even with the logistics or the intermediaries, like we saw with Echo, they did a pivot and control their costs very, very well. And they did an excellent job. So the nimbleness, staying on top of that data, being flexible is going to be key. And I think a lot of those, we saw some earnings that were down in truckload, no doubt about it. But a lot of those were heavy into industrial. And so they should have a better second half. It's no shock that if you were heavy in industrial, et cetera, the first and second quarter were tough, right? Look at rail.
Oh, yeah.
And you're seeing that rebound.
Well, let's shift to the future of trucking.
Let's do that.
Automation.
Let's do that.
Because we have
excellent.
on the line right now the president of TuSimple, Cheng Liu. How are you doing today?
Good. Michael, Kevin, thanks for having me on. It's really a pleasure to be on the show with you.
It's a pleasure to have you anytime.
It really is. Thank you, Cheng, for coming on. I first met one of your people in 2018 at the Maritime Conference in San Diego, and I thought it was brilliant. I think at that time you guys were really concentrated heavily on automated vehicles within the port exclusively. Is that correct at that time?
I think we started in the port.
Right.
It is a easier use case. But the larger market and where we believe we can add the most value is on the highways, on the middle mile. And so it's always been a part of our plan. And over the last 2 years, we've moved away from the port and really focused on the highways.
Excellent.
Yeah, definitely. Can you give us a little bit more background on TuSimple?
Sure. TuSimple, where, as you said, we are thinking about the future of trucking all the time. We are a technology company that's focused on really delivering a autonomous freight solution. And so what that means is we're looking to build the most reliable autonomous driving system for trucks, and we're thinking about how to bring that autonomy to the market safely and efficiently.
That's excellent. So, Cheng, I want to kill an elephant in the room, so to speak. So, we had a report a couple days ago. You've been very, very bullish on autonomous vehicle and your company's performance. You've put out some 2026, I think 20 or $12 billion revenue, et cetera. This year is no secret a little bit of a tough year for a lot of people. Are you still that bullish on the future of autonomous vehicles that quickly? And you had also stated that your goal and your belief is that you will be the first to put out trucks without drivers in them. Are you still that bullish on that?
Yes. So on financial projections, unfortunately I can't comment on those, and I think those numbers were guided in ways that unfortunately was not the right way to get them. In terms of our confidence in our technology and being safe and reliable, I'm very bullish. And as you saw, we have the announcement about 3 weeks ago about Autonomous Freight Network, and that is a concrete way for us to roll out autonomy nationwide by 2024. So we're very confident that we're on track there.
Okay, and you're bullish, and you've announced a couple big deals of late. One of them being Navistar. Can you give us a little bit of background and color and kind of what you see that partnership looking like in the future?
Sure. The Navistar Partnership is a huge milestone, I believe, for us, but also for the industry. It's talked about what we have to do is bring a very safe and reliable autonomous truck to the market. And that's not only the software, but also the hardware. And Navistar is one of the big OEMs in North America. They have 120 years of knowing how to make a truck. And so this collaboration, this partnership allows us to merge really the best of both worlds, our software know-how, their engineering know-how, and to bring a line of purposely built autonomous trucks that can better serve users.
Excellent stuff. So, Cheng, one of the things that interested me greatly was the autonomous freight network, and you've got these different phases for rollout of this. Can you kind of talk to that a little bit and talk to the time frame of how you see that opening up, how you see that working?
Absolutely. So, it's kind of to help maybe the audience visualize what this means. There are some limitations to the level 4 autonomous trucks that we're building, what the industry is building. And one of them is these trucks all operate on predefined routes. They have to be mapped ahead of time. So imagine us going there and taking a very detailed Google map of this route. So it's high definition, 3D, to the centimeter. And that's to ensure the safety and localization, knowing where the trucks are all the time. And so that means that as we build a truck, it's similar to us building a 5G phone, right? But ultimately, for the 5G phone to work and for users to benefit from it, you need a 5G network. So cell towers and that connectivity. And so that's what the autonomous freight network is. And then our idea is we can't do this by ourselves, right? It's a tool that we can have autonomy to empower our users. And so let's have an ecosystem approach where working with UPS, McLean Foods, US Express, Penske, and grow this ecosystem for us to build this network. And this network comprises of terminals. So obviously places where autonomous truck can start and stop a mission, and then these high definition map lanes. So there's 3 phases. Right now we're operating in Arizona, New Mexico, and Texas, really along the I-10, which is one of the big freight corridors, as you know very well. By 2021, we'll expand the network to the southeastern part of the U.S. And then our goal is by 2024 to have a nationwide coverage, really along the major interstates. So that's the plan at a high level.
So when you talk about autonomous trucks and rolling those out and scaling that up, it sounds like the long and medium kind of hauls are the easiest and the easiest to roll out at first. Is that correct?
That's absolutely correct. Because there is a challenge to rolling out the maps and to update the maps, right? And so really where the autonomous trucking really has the most benefit, we believe, is that middle mile, where today, it's team drivers. It's drivers are away from home for weeks at a time. It's a tiresome job, and we believe this is where it makes most sense for this technology, and also makes most sense for the market in terms of how we can be of value for this.
Thank you for that, Cheng. And that makes perfect sense to me as well. But it also goes to speak to the reliability, I guess, of the environment and the map around that this truck is going to be operating on, right? That's why it was like within port, you can control the spontaneous event from occurring, right? And the longer the haul, as you said, those longer hauls, mid-hauls, not only is it attractive because of the nature of the job, but it's also a little easier to control than navigating downtown Manhattan or Los Angeles.
100%. So in the industry, there's a thing called edge cases, right? Things that you see. So certainly of course, a port will be easier. But then on a highway, compared to an urban environment, is still much easier. Still a lot less edge cases. And for us, reliability and safety are the number one concerns. I mean, these are things that we live and breathe day in, day out. With the Navistar Partnership, it's about reliability on the hardware side. With the Autonomous Freight Network, it's about having a reliable way of scaling the autonomy. So no question. I mean, we also employ, if you've seen kind of our trucks, we have a very comprehensive suite of sensors, 20 cameras, 2 LiDARs, 5 radars, a bunch of GPSs. So all these things ensure that we can capture the world around us, understand what's going on, make the right decisions. And all these things also have redundancy. We're planning for what happens if some of the cameras doesn't work all of a sudden, right? And these things
Yeah.
can break down. So this is what we spend our time on, to make sure that it's a very safe and reliable system.
That's a very interesting point when you bring up maintenance and breakdowns. What are some of the most significant hurdles and breakdowns and maintenance issues that autonomous trucks have that normal, diesel trucks with a driver don't have to worry about?
Sure. The new things that an autonomous truck will have on top of a typical diesel truck today are really the sensor suites, as well as there's more computational units inside the truck, right? And as you know, a truck is built to last 1 million miles. So that means that all the sensors and all the servers in the truck have to be auto grade and have to last that long as well. Right? What we don't want is a user of the truck to have to go one place to service the engine, another place to service the sensors all the time, right? You want that full solution so that users almost feel like what they have today. And again, this is where the partnership with Navistar and as well as the tier ones makes such a big difference.
It absolutely does. So, Cheng, you're in the are you in the China market as well with this? You're in the Asian market, I believe it's in China as well, right? With this technology, correct?
We have some testing in China.
Okay.
Our main operations in the U.S., but we have operations in China as well.
Right. So okay. I thought that was the case because it only makes the next question only really makes sense if that's true. So given your knowledge of both of those environments and both of those political and ecosystems between the two, which do you think is most likely to have autonomous vehicles driverless in any mode? Well, let's over the road, long haul, mid haul. Which is going to be there first, and why do you think so?
Sure. We firmly believe that the U.S. will be the first. So today, in fact, regulation is actually ahead of technology. So if you look at the state by state as well as a proposed federal regulation for autonomy, there's several states, 21 states that allow for full commercial autonomous operations. And there's about 38 states that allow for testing. And that's across the whole state. And so from a regulatory standpoint, the U.S. is ahead. Second is just from when you think about actually the market, what's interesting is in the U.S., it's very much a tractor-trailer configuration. Right? There's about 2.5 million tractors and about 12 million trailers. So it's very much a hook and drop for the truckload. Mm-hmm. Whereas in China is more of a single configuration. So the truck and the trailer are connected. And one of the big advantages here is that, the purpose of these trucks is these trucks can operate 24 hours a day. So imagine this truck going from East Coast to West Coast in 36 hours and then going back, right? Hooking and dropping and going back. That's how the value we can provide to a shipper or to a fleet is to able to use this assets 24 hours and then really on the truckload side of it to make the supply chain more efficient. So for these two reasons, we believe that the U.S. will be the first to commercialize this technology.
Excellent,
yeah,
because when you talk to people, they normally say, the technology's there. It's the regulations, et cetera, that is going to determine this. And we just learned from Cheng that actually regulation is ahead of technology, which is amazing.
Which
I didn't know
is
that.
something that we were talking about before we went on air. We both picked China, and Andrew Cox picked China too.
Absolutely,
but I guess we were just completely wrong, which is fine.
So nobody won. We'll roll it over to the next bet.
Definitely right. Well, Cheng, thank you very much for your time today. How does our audience reach out and learn more about TuSimple and what you guys are doing over there?
Sure. We have a great website, TuSimple.com. There's contact information, videos of our technology, videos of our partners. So please feel free to check it out, and love to stay connected with the audience.
Absolutely,
Fantastic.
Cheng. Thank you so much for coming on.
Thank you.
Always interested to talk about the future and downstream, but now we're going to swim upstream and look at the industrial economy and
we are
and how that is looking on the raw materials side with Ken Sherman.
Ken Sherman, president of IntelliTrans. How you doing, Ken?
Good, Michael, and you?
I'm doing very well. As Kevin says, we're looking forward to swimming upstream in the supply chain to find out what's going down.
Yeah.
So you've been on here. You've been on here before, but give people a little bit of background on IntelliTrans, what you guys do there.
Yeah, so IntelliTrans is a technology and transportation management services provider, providing things like transportation management systems, in-transit visibility, inventory management solutions, primarily focused, as you were saying, on the bulk and break bulk commodity industries. So think forest products, plastic and chemicals, steel, energy, things like that.
Great. Thank you very much, Ken. Thank you for coming back on the show. And I think what Michael and Vincent and I, our most pressing question is, what are you seeing upstream? How's those raw materials moving right now?
It's actually recovering about the shape. If you look back at what were people predicting for a recovery, was it a V? Was it a U? Was it a W? What we're seeing right now is it looks more like what were people calling the Nike swoosh recovery, where you had a rapid drop and then a slower kind of recovery. So what we saw was that if you use it kind of on a normalized ratio basis, thinking, pre-COVID-19 impact being 1, between weeks 13 and 18, it dropped down to about 0.8 in terms of the amount of shipping that our customers were doing. And what we're doing is to make sure we're separating things out. What we're doing it is on a same store sales basis. So customers I had in the same period last year, same period this year, so I'm not, including my growth in any of those kind of factors. And now we're up to, from week 18 to now, we're back to about 0.9. So we've come back about halfway from what we've lost. But it's an interesting mix. If you dig down into, say, market segments, those that supplied products that ended up going to a consumer, say, through a retail chain, versus delivering the same type of thing to the consumer, but while they were at work or while they were at restaurants, the folks that were weighted towards consumer markets really were roughly flat year over year. As were folks that either supplied products that could be used in the pandemic response, think medical grade plastics and things like that, or those who could, transition manufacturing to help out, like switching a chemical line to be able to make hand sanitizer. They were roughly flat year over year, Q2 2019 versus Q2 2020. But what that means is that everybody else was actually down 30% or so to get to a weighted average of about down 20%. So, those guys are still flat. They were serving, consumer or pandemic needed industries, which means most of the recovery that's happened has been in the industries more traditional. So on the new side, what we have seen is that customers are returning to resuming investments into business improvements. They've gotten a little bit more confident around what the future holds. And so where new deals between, like, say, mid-February to mid-April kind of screeched to a halt, we're seeing since then, a gradual resumption of activity where we're not quite to kind of normal rate in July, but we're, pretty darn close.
Interesting. I was, looking at the rail, and I like to look at the, obviously, auto, but chemicals, et cetera, on rail car movement, et cetera. And I'm seeing, auto is obviously up, and it's kind of a little bit flat over the last, week or so, but that's fairly normal. But chemical has been chemical bulk carload has been spiking. It's not up to where it was before. Like you said, it's been recovering since June. What are you looking forward going? What's the forward look in your stream?
Yeah, so absent any dramatic change in kind of consumer and business attitudes based on the spike in cases and increasing fatality rates. So putting that, big news to the side, what we're seeing is kind of a gradual continuation of this trend. And you're right, it's kind of funny. I have the rail metrics up in front of me. So to give people kind of an idea, in the chemicals industry, it went from, say, 34,000 units a week, in 13, down to a low of about 25 or so and now it's back to about 30. So again, they're about halfway back. So we're seeing that kind of continued confidence going forward, building slowly but surely. Again, absent some kind of market change in attitudes based on what's going on with the pandemic.
What about if we take a look specifically at the auto sector? I know a lot of our viewers are tied to auto parts and auto manufacturing, freight volumes. What's that looking like? What's that recovery looking like? Because the last time you were on the show, it was in free fall.
Yeah.
So there must be a recovery. Yeah. And is that a Nike switch as well? Is that pretty healthy from the data that you have?
What we're seeing on that one looks more like a U if the right-hand side of the U isn't as high as the left-hand side. So it dropped, faster and more deeply than other segments, dropping, say, using, again, just the rail data as a point of reference, like 20,000 carloads a week, down to near zero. And it, hopped around near zero, from weeks like 14 to 20. It's now significantly rebounded, to about 14,000 carloads a week. So it's not all the way back, but it came back, very rapidly once people started getting, some of the inventory out and, needing to distribute the parts, raw materials, and, obviously the finished automobiles to the market.
That makes sense because we saw the over the road, the truckload spike. Right, and we saw that move, and that would be changing. And you even talked about the markets that we were looking at. The movement growth was really, it looks like warehouse to warehouse, right? LA to Stockton is a warehouse to warehouse move type of thing. That type of thing, for example. But now we're starting to see rail car activity actually improve, which is excellent. It's a good thing to see.
It's a decent economic indicator for the economy. So like back in the 2009-2010 period, we go past the rail yards here in Atlanta, and you could tell how poorly the economy was doing by how quiet the rail yards were.
Yeah, absolutely.
Definitely. We have about a minute left, and one last question. When you go out and talk to your customers, how are they changing their supply chain, or what are their thoughts on moving forward? How to adapt to maybe a new normal?
Yeah, so there's a couple of things. One is at the more tactical level. How do I simplify my operations by taking keystrokes out and clicks and things like that? So a lot of tactical activity around simplifying that. At the larger level, you're seeing a few things. People are looking to drive, improved operational efficiency in their customer service department. So how do you, answer questions more easily, let the customer self-serve? Customers have always been interested in reducing costs, but the payback period now for what's getting, green lighted, has to be almost instantaneous versus, say, a 12 or 24 month payback. They're looking at inventory visibility in their distribution chains, being real time and accurate, because they may have decent information about their locations that they're distributing through. But how do they gain visibility to third-party locations through which they're distributing to the end market? And then finally, what we're seeing is with the reduction in force, and a lot of times the labor side is how do you reduce the labor demand for experience? So either looking at outsourcing labor to folks like us, or how do I digitize the knowledge within the solution?
Excellent stuff, Ken. We're out of time for this segment right now, but we really appreciate you coming on. Where do they go to? How do they learn more about IntelliTrans, what the great work you guys are doing there, Ken?
Yeah, they can come to www.intellitrans.com or follow us on Twitter and LinkedIn. And the handle there is, in both cases, is IntelliTrans.
Excellent. Hey, thanks for coming on, Ken. We'll talk again soon.
Sounds good. Appreciate it. Take care.
Yes. I always like, going upstream and see what raw materials. I'm going to keep on saying upstream, I think.
You're just very proud of yourself because you came up with we're going to swim upstream.
I know, right? Yeah, I can't let that
I got you.
At all. At all.
Hey, you know what just occurred, though?
The 3PL
just the other day,
Summit.
The 3PL Summit did.
Yeah. Let's run the
with the great
video.
town hall. We've got a video here. I think they're going to cue it up for us here.
Yeah.
If we could run that for everybody. We'll talk a little bit about the takeaways from the 3PL Summit, which was excellent.
Yes.
Welcome back to the 3PL Summit. We are excited that you're here.
We are welcoming two extremely special guests to the show. One of them is the real Wolf of Wall Street, Jordan Belfort. Jordan, thank you for joining us on the air.
Thank you. I'm glad to be here.
And the other one is the one with a brand new fresh coat of paint on him. It's Trey Griggs. What's up, brother?
Hey, what's up, fellas? Good to see you today.
What an amazing way to kick off today's show. We really want to thank Brad Jacobs, the chairman and CEO of XPO Logistics. That was fabulous. We thank all of our participants. You may see something beautiful on this screen. This is something new we didn't show you during our May event. These are our virtual booths. We want to thank our headline sponsor, HubTech.
Pretty cool, right, Kevin?
Very cool.
I put that together myself.
I know you did. You spent all night working on it.
Not true.
No, those are
not true at all.
Great job by the video crew.
The whole
TV
production
crew,
team has got to give them a hand. They did
Cody
it. They did the magic.
Billy,
Yeah, man.
all of them.
They killed it. So it was
Jimmy, yes. Sorry,
Jimmy.
I knew I was
You got
leaving
Jimmy.
someone out. Jimmy.
It was great stuff, and in that video you hear Emily talking about the town hall and Brad Jacobs. That was tremendous. He is such a great speaker. I like to watch him speak,
Yeah.
and he didn't know any of those questions beforehand. He refused to get them.
He did not. He did the same thing in Atlanta in Transparency 19, I believe it was. He did a town hall live, but he did a town hall again. Yeah, and of course, both times he didn't know what the questions were. He just went out there and answered it, and you got to give anyone who will do that a lot of props, and it was
Absolutely.
a fantastic way to kick off the conference. I don't want to leave out Emily Zink, who put it all together as well. But yeah, I had a really good compliment come in this morning from a guy I went to business school with.
Oh, is that right?
He said it was like watching ESPN.
Right.
He watched Put That Coffee Down and said it was fantastic, and that it's really the TV quality of our virtual events. And the next one is, I believe, April 19th and 20th.
August.
Oh, I'm sorry. I keep on saying April today. August 19th and 20th, and that's the Carrier Summit.
Carrier Summit. That's going to be great. But you can catch all of the 3PL Summit content on demand at live.freightwaves.com or hear the podcasts looking up the Freightcasts on your favorite podcast player, right?
Yeah.
What do we got coming up on FreightWaves? I guess that's me, right?
That's you, man. It's Thursday,
Yeah.
so 4
freight
p.m., what do we
forecasting,
have?
like I said, Zach Strickland's going to be on. He was a pricing guy in a former life. He worked. I worked with him. He was a pricing guy at a former life with myself, and so we're looking at the 7.0 release of Sonar and the lane scorecard and how you can utilize that as a pricing guy at a carrier or a shipper. And really at a 3PL as well. It's a tremendous tool. So we're going to dig into that big time. Tomorrow on What the Truck, we have the Shark Tank success story, Tom Burden, who is CEO and founder of Grip Mat, if you remember that one, the Teflon mat. Paul Stipich, traffic manager at Tip Top Poultry. The freight coach, Chris Jolly, will be on. And Bruno
fantastic.
Silva from Basic Block will do a Play It Forward, which is going to be pretty cool. And then my weekend Saturday about 3:30, I'll be on FreightWaves Radio this weekend with
Sirius,
Ryan Schreiber, Wayne Craig, and more.
Oh, nice.
The Dooner will be on there as well.
Of course, FreightWaves Radio, Sirius
can't have it without
XM 146, the Road Dog channel, every Saturday from 3 to 5 Eastern Time. And then rolling into next week, we'll be here on Tuesday as well. But I just got word that we have a special guest on this Wednesday's Put That Coffee Down coming
Next
up
Wednesday
next
you do?
week. And it is Toby. And I don't know Toby's last name. I don't even know if he goes by last name. He's like Dooner, I think. But Toby runs the Morning Brews social media accounts.
Oh, is that
and
right?
he has his 10 or 12 rules of social media, and they are brilliant. And
That's excellent. I will be tuned in.
Yeah, so he's a monster of social media. So if you want to learn how to really gear up social media, LinkedIn, Twitter, Facebook, It's going to be an excellent show next Wednesday on Put That Coffee Down.
Looking forward to it. They're always excellent, though, brother.
They are. But that wraps up.
It was nice to be back here.
It is. See you Tuesday.
Peace
12
and
p.m.
love, everybody. Have a great weekend.